good. I think I was doing well until um, we had the little inflection point, and
So
then
the pullback here.
yeah, yeah, and then I got into some stupid positions.
Okay,
And
well,
I
let's
lost a little bit.
so market pulls back, you've been aggressively long, which you should be because the market was very strong, right?
Yeah,
There's going to come a point during the period where the market pulls back and you take some hits, but you have to keep going long because, overall you're going to win that way, right?
yeah.
So it's not necessarily you were taking stupid positions. You just probably just took losses, unless you
No,
took
no,
really big losses or averaged down or something like that. But
yeah.
what is it that you actually that you did?
I I took positions where there wasn't a proper trigger. I was trying to catch a bottom off of
Okay.
like
Were
just
you doing that on the way up too, or was it
no,
just during
no,
that
no,
period?
no. I think no. I mean, it was definitely when I went off of my strategies when I started losing money, and I
Okay.
didn't notice. I didn't notice it like when I was doing it, but then I went back. It's like, oh, this is not your strategy.
Okay.
Of course, you lost
So
money.
this is becoming kind of a common theme, and it seemed to be a little bit of a theme even before you got together with me, where you had mentioned you went through some of these periods like this.
Yeah,
Um, Obviously, you know what to do. As we've been going through it, I can see that you're picking up things very quickly. You understand exactly what you're supposed to be doing,
right.
right? This isn't too hard for you. And not only that, there's different levels of this. There's anyone with somewhat slightly above average intelligence can pick up all this stuff, right?
Yeah,
That's not hard. But then there's also this intuitive kind of feel that some people have that some people don't. So you can be successful, but then you can even be more successful.
right.
I honestly think after the time we've been together, you have that too, where you seem to have a good feel for the market. You're able to put all these things together, but sometimes you go off the grid and you do things you're not supposed to be doing,
Yeah,
and you know it. And we go through it, and it's like, why the heck did you do this? I know you're not supposed to be doing. You're not supposed to be doing this. Um, the question is why. Like you have to get to the reason. Why am I doing this? Why do I know I'm not supposed to do this yet I do it anyway? So I know. I think we might have talked about this before. Keeping a journal where you talk about your thoughts,
yeah,
and as you're on a daily basis as you're going through this, most days are pretty normal and you don't have much to write. This isn't happening all the time. The problem is, it's like you stay good 80 to 90% of that time, but the 10% you don't, that's where it really crushes you
yeah,
over time. And you just have to kind of get to that crux of, why do I do this? And I've done it too. So I've had to go through and kind of figure out why I do it. With me, it's kind of this competition aspect where I just don't want to lose. And I really had to learn to let go of certain things and accept losses, accept that, okay, during this drawdown, I can't win during this period, and I have to just kind of let go. It could be something else for you. You kind of have to figure out what that is. But have you kind of gone in and looked at what you did and said, okay, why did I do this? What was I thinking when I was doing this?
yes, I have.
Okay.
So it's exactly what you say. It's okay. I know what to do, but then there's
Uh,
like some subconscious, like little thing in the back of your mind. You said for you, it's like you have a problem with losing, right?
yeah.
For me, it's like I think it's some type of deep seated insecurity where I'm not moving fast enough or I'm not where I want to be. So I think I try to rush it. And when I rush it, I just
Yeah.
make
And
decisions.
it is kind of like you always feel like you have to be making money or have to be winning or have to be,
Yeah.
you can't just sit still and not do it. But you really have to come to get grips with that with trading, especially swing trading more than anything. Because with swing trading, there are periods where you have to step back, and it can be frustrating to sit there and almost not do anything, right? And you feel like you're not accomplishing anything, or
Yeah. Yeah.
but you, as a swing trader, you have to do that. If you remember on our when we talked about market analysis, we talked about the why we do market analysis is because there are periods where you have to be super aggressive, right? And there are periods where you have to step back and not do anything. Um, I could relate this to day trading, but today the reason I was 15 minutes late here was because this is a really wild kind of day where I need to be trading more. But there are other days where I literally trade for 15 minutes and I'm done. And for me to go back and trade the rest of the day would not be smart, because I'm probably going to take a lot of bad trades that are not good. The opportunities aren't there. So you really have to know, and that was day trading, but with swing trading too, you need to know, okay, the market's pulling back here, we're overbought. And by sitting here doing nothing, I'm actually accomplishing something, because I know if I am trading here, I'm going to be losing. So, it is tough. You just have to work at it, know you're like that, and kind of attack it. But what was it specifically that you did? What were the trades?
I think I took positions. I don't remember. I mean, I took.
Okay. Well, put a Post-it note on your computer. Basically, one, I would say follow your rules, follow my rules, and look at that every day, because then it gets in your head that, okay, every day I need to follow my rules. And if you say it to yourself, and sometimes, what can also happen in a really good market, you might be making some mistakes, but the market covers it for you because everything is going good. But then the second the market does that, then, what you're obviously, it's not going to cover those and you're going to take hits. So I would say follow your rules. The other thing I would write is only take quality setups. So I think those two things, if you look at it before the trading day every single day and it's right in front of you, and really say it to yourself, don't just look at it, it'll keep you out of doing some of the things you don't want to be doing.
Okay.
Okay, so outside of that, how comfortable do you feel with everything we've gone over, the methodology, trading itself, how the market has been the past few weeks? How comfortable are you feeling?
Pretty comfortable. I mean, when the market goes straight up like that, if I follow what you've been teaching me, everything is pretty easy.
Okay, good.
I haven't had the chance before, but now in the last 2 weeks, I've been going through all of our old mentorship sessions and just watching them, rewatching them, and then writing notes and questions. So I'm compiling a list of questions.
Good.
At some point in the future, I'll
okay, well, do you have them on you now?
No. They're all written down.
Okay. Why don't we make next session an open session?
Okay.
Get all your questions and we'll just talk. It'll be more mentorship. Today's going to be a lesson.
Okay.
But it'll be just, whatever you want to talk about, we'll just talk about it. Have your questions, put it in a document. I can go through them. If I can look at them a little beforehand, it'd be better. That way I just kind of know what we're going to talk about.
Okay.
We'll do that next time, but that's good. And I'm glad you're reviewing stuff, and I'm sure reviewing it now, and we've been through the market now for however many months, you kind of see how all this stuff has played out. And if you had done this according to this lesson and this according to this lesson, how everything would have been very simple.
Yeah.
Okay, good.
A couple more questions. You said that there's one aspect of knowing all this stuff technically, like the terminology and all the I guess all the academic work, and then the other aspect is having a feel for it.
Yeah, feel for it. I think it's more of a putting everything together. You start to develop a sense of what's happening. Like when we learn this stuff, you learn it piecemeal, right? You learn market analysis, you learn sector analysis, you learn this setup, that setup. But as you've seen, they're not specific things you do on your own. We have to learn them on their own, but then you have to have this ability to put everything together, right? And I think some people do that better than others. And I think you're doing it pretty good, and you're starting to see things. You may have noticed the way we caught the market in the bear market, this recent bull market, understanding that and then knowing how to trade from that. That's what I mean by the kind of I wouldn't say a sixth sense, but just being able to put it together. And the other thing is recognizing patterns. So you're probably noticing now as well that a lot of these patterns, and actually what we're going to go over today, we're going to see some of this as well. These things play out over and over again. Nothing changes. We can go back to the 1800s and, you hear all this talk about, AI and algos and all this stuff changing things. And they do change things a little bit, But if you really go back with all the new technology we have now, and you look at the charts now, and you look at the charts from 1930, just before the Great Depression, and you look at the charts from the late 1800s, bull markets, bear markets, it's exactly the same. Everything is playing out like it always has, and always will. So if you're good at recognizing patterns early, that's also kind of this intuitive kind of what I call it. It's really not intuitive. It's there, but some people just recognize it more. And I think you've been doing that, which is good. You're going to see some of that today. Like we're going to talk about IPOs, and you're going to see the same stuff that plays out over and over and over again. So that's more of what I mean, but it's not any magic or anything like that. It's just the way you put things together.
Okay. And also one more question. Did you happen to take any short positions in the last week or so?
I have not taken, aside from, in my, not in my basic swing accounts. No, in aggressive, like day trading, swing trading. Yeah. But that doesn't relate to what we're talking about here. In normal kind of swing holds, no, I haven't been taking any shorts. Rather, I'm just getting less aggressive. And like last week, I didn't add any positions, and I'd whittled them down. So I'd had like 5 positions. I got stopped out of a couple, and as they were going down, I didn't add anything. On Monday, I added 2 positions. So yesterday, I added NVIDIA and Brazil, BRZU.
You haven't, even though the market was under the 9 for like 2 or 3 days.
Yeah, I still saw underlying strength. So
can you explain that?
Yeah, so we think back to market breadth.
Yeah.
Let me actually pull up the document so we can go over it step by step. Okay, when we go through this, so if we go through, say, new highs, breakouts, not much change there. My watch list still felt pretty strong. One thing I noticed late last week as the market was pulling back, I was still finding a lot of stocks in my watch list that looked strong. So that was one big market tell for me, that it wasn't like I was looking at my watch list and everything looked terrible and everything was breaking down. Things were still holding up pretty well. And obviously stuff was pulling back, but they weren't pulling back at a level that was concerning me.
By looking bad, you mean failed setups, and you didn't see a lot
failed setups or stocks that are just look like they're breaking down, breaking right through support levels, that type of thing. Okay. I wasn't seeing. I mean, occasionally you saw stocks that were doing that, but overall, everything looked still pretty healthy. Okay. So that's just one thing. We have to look at a number of factors. Then looking at SPY versus IWM, small caps seem to be holding up okay. There was a little bit of weakness, but they didn't completely break down. And then Monday was very encouraging as well. For small cap specifically, I was looking to see this last consolidation range. If it broke through there, I was going to get very concerned. But small caps were holding up pretty well. Then when I looked at SPY versus its equal weighted ETF, so if we look at SPY here, and you're familiar with RSP, right?
Yeah.
Yep. RSP held up really well. So that was really encouraging. That when I'm looking at SPY, just thinking about the bigger SPY stocks versus the rest of SPY, the rest of SPY was holding up well. It actually held up around the 200-day moving average a little better than SPY did.
Yeah.
So all of these things, I went to market neutral. I wasn't saying, okay, I should just add long here. It wasn't that good. But it also wasn't at the point where I say everything is breaking down and I just got to start shorting.
Yeah. Okay.
So that was the market breadth, and it's kind of playing out the way market breadth held up, and now this week we look pretty good. So when you're thinking about the market, always go to your market breadth indicators and look at, okay, underlying, what am I seeing? And if it starts to get a little concerning, then obviously you shift. So I went, rather than going from, I had been slightly bullish, rather than going slightly bullish to bearish, I went slightly bullish to market neutral. And market neutral guided me in the sense that, okay, I'm going to be cautious now, but I'm not going to short yet.
Okay, and now that we've seen that the S&P got right back up over the 9.
Now I'm slightly bullish again.
Now I feel like,
which is why I added 2 positions yesterday. But still, again, I'm not going to get aggressively bullish and start just adding positions like we were in here.
Until we break.
I'm not going to do that until we break 281.
Yeah. Okay.
So this level has been tough. I thought we were going to break it here because we had good market breadth. coming on strong here. We'd consolidated, so I thought we'd consolidated enough that we weren't too overbought. But obviously here it didn't work out. So now we're going for a fifth time, and hopefully this time we break out here. If we do break out here, I'll probably get pretty aggressive going into the test of the highs.
Right. Okay.
Okay.
All right.
So that's where we are at the market, and how you should be thinking about the market, and how you should be trading at this point. Okay, let's talk about IPOs. What's your familiarity with trading IPOs?
I've done it very kind of from an amateur perspective.
Okay. Well, you won't be an amateur anymore, and I think now you're going to be doing things that a lot of people are clueless about, which is going to give you a huge edge. So when I look at IPOs, and most people when they're thinking about IPOs, they're thinking like that year the stock IPOs, right? Snapchat IPOs, and you're watching it for like 6 months or whatever, and you consider it an IPO. I actually consider stock an IPO stock for about 3 years. So it's not just when it IPOs. Like to me, Twilio, which we've been watching for a while, it IPO'd in 2016. That is still in the late stages of being an IPO, and we're on 4 years now on that, or three and a half years. So we're talking about a pretty long period, and during that period, there's going to be a lot of opportunities in that stock. So the way we're looking at it is like this. There's an early period, a middle period, and a late stage IPO period. So if we draw this out, we're going to say this is time here, and we're dividing it into different periods here. Okay, this is early period, this is middle period, and this is kind of the late stage. All right. And each of these periods we are going to trade very differently. And these periods tend to correspond with specific things about the IPO. So early period usually lasts around where quiet period ends. Are you familiar with quiet period?
Yeah, no trading from insiders? Or
no. Okay, you're thinking of lockup. Okay, and then here is lockup expiration. Okay, so these are two important dates for us when we're looking at the IPO. Quiet period and lockup expiration. What quiet period is basically there can be nothing, forget about trading, there can be nothing said about the stock. There can be no marketing, no analysis. So, when you see upgrades, downgrades, analyst reports, that type of thing.
Oh, yeah.
There can be none of that during quiet period.
Oh, I didn't know.
Yeah, so Goldman Sachs, their analysis can't put out a paper on it. They can't upgrade or downgrade because there's nothing to even upgrade or downgrade. They haven't been able to say anything yet. So it's kind of like the wild, wild west. We know very little about what people think of the stock itself, right? So this is the early period. Then quiet period hits. That's the period where marketing can start, where all the institutions can start talking about the stocks. They can put out reports about them, and you start getting the upgrades, downgrades, all that kind of stuff, hold, buy, sell, whatever. That gets us into the middle stage. This period we trade basically like we normally trade. We don't have to make any adjustments. Okay, so that's this middle period in here. This period, usually there aren't specific defined dates. You have to watch the stock and see when quiet period ends and starts. Usually this is the first 30 to 60 days, somewhere in there. Then you have this middle period. Then there's lockup expiration. That's what you're thinking of. So lockup expiration is basically, in the beginning stages, usually the first 6 to 9 months, the insiders cannot sell. So whoever the initial investors were, just like you see on Shark Tank, when there's initial investors to something, whatever they bought at, they're stuck with it until lockup expiration. So obviously lockup expiration becomes an important date then, right? Because now all of a sudden you have these new shares coming on the market and a lot of times it's selling, right? Because people want to let go of the stock at that point.
Yeah.
So this lockup expiration becomes very important, and that leads us out of whatever this middle phase was into this late phase. And then this late phase, we're usually at about, 30 to 60 days here. This period lasts maybe 9 months or so, and then a year to 3 years out, we're in late phase. Okay? So be aware of these different periods, and now we're going to talk about actually trading during these periods. Let's talk about lockup expiration. Actually, before we get to that, let's one comment here on jumping in early. You know, there's a lot of big popular companies that go from private to public. You might get excited. I don't know if you've ever jumped in on the initial days of an IPO, but don't ever do that. Don't ever just jump in. You know, this year we're going to have Uber IPOing. We're going to have Lyft IPOing. Everyone's going to get excited. A lot of people are going to, just because they know the stock, they're going to jump in on the first day, and they're likely to get crushed. Okay. I don't know if you were trading or paying attention around the time when Facebook IPO'd way back when.
Yeah.
Yeah. Facebook IPO'd back in 2000. We'll go to the monthly here. Facebook IPO'd back in 2012, and even this time it was considered one of, you know, the biggest, best companies, but it just wasn't public. It was private at that time. It IPO'd and on that first day, it hit a high of 45. And that was basically the high for a long time. You know, everyone was talking about it. We haven't seen an IPO like that since, where just everyone, I mean, I had aunts and uncles who were, you know, jumping into it, and they knew nothing about stocks, and they bought on that first day, right? And I remember them coming to me, and I just got tired of all of them asking me about what to do with Facebook, you know? And you know what it's like. You probably know what it's like. But so initially 45, and then look what happened after that. These are monthlies: 1, 2, 3, 4, 5. 6 months later, it hit 17. Right?
Yeah.
And this is Facebook, you know, one of the best companies in the world. And it went from 45 to 17. So that just shows you just never jump in on that first day. You don't, no matter how good the company is, you don't know what's going to happen after that. But you also see here why I say we watch it 2 or 3 years out, because a lot of stuff happens in this period here. This was one of the most profitable times to trade Facebook, was during this period right in here. So never jump into that initial euphoria. And then know these periods here. Okay, let's what did I do? Let's talk about lockup expiration. I think I mentioned most of it already, but know when lockup expiration period is. Now, when the stock IPOs, these dates aren't set right away. Where you have to kind of keep watching and find out when it's going to be. There's a good site called IPO Scoop that has a lot of this information, or you can just Google it. You know, if you're watching an IPO, just keep Googling, and eventually you'll get the date. Usually between 90 and 100 days out. So somewhere between a quarter and a half a year out, we get the lockup expiration. Stocks often drop after lockup expiration due to increased supply coming in, and they want to sell. So oftentimes they're selling. Be careful around that date. I treat lockup expiration a lot like earnings. You know how we don't hold through earnings?
Yeah.
Lockup expiration is kind of the same way. You know, have your fund, trade it during that middle period, but know when lockup expiration is, and usually you want to get out before that. Okay. Now we are going to talk about ways we trade through it, but your default is going to be don't trade through it. So be careful around lockup expiration date. Stocks often start dropping at that point, after that point, and even before that. And we can game this by shorting if there's a technical pattern breakdown before that date, especially if there's a couple of factors we're going to talk about. But we'll wait to talk about that in a second. Now let's talk about post-lockup expiration trading. Okay, and we'll get back to trading around lockup expiration. So post-lockup expiration, we're going to talk about this period in here. Okay. We've had expiration. Now, what do we do during this period? First of all, we're going to assess what the stock has done. Has it been a runner since it IPO'd, or has it been beaten down after it IPO'd? Most of them are not going to just kind of stay in this tight range. They usually have either made a big run or they've been beaten down. Okay, as you saw with Facebook, Facebook had been beaten down. Twilio had been beaten down.
Yes.
More recently, if you've been following Huya, IQ, Billy, all the China IPOs, they have been beaten down.
Yeah.
But so I'm going to categorize them. If they have been beaten down, I'm going to watch them. And you want to be also creating an IPO list. So you should have we have breakout list, breakdown list, your main list, your main list. You should also have a list of IPOs.
Yeah.
Okay. And you should be tracking these things, even if they're in the stocks are in your other lists as well. So you want to track the ones that have been beaten down. Essentially, like say something opened at 40, and then, through this period, it went down like this, and maybe now it's trading at 15. Okay. As you saw with Facebook, just because it's been beaten down during its IPO period doesn't mean it's a lost cause and it's never going to make a run or anything. A lot of times the best stocks did very poorly during their IPO periods. So there's going to be a lot of opportunity to trade some of these on their upside. So the stocks that have been beaten down, what we're going to be looking for are bottoming formations, rubber band setups, breakdown continuations, and once they completely reverse, we're going to look for high breaks. So let's talk about each of these specifically. One is bottoming formations, and we haven't gone over the bottoming formation setup yet. We will, but you probably have a general idea of a bottoming formation. Essentially, a stock starts to bottom, you see good volume coming in, and as it starts to volume, maybe bottom, maybe it puts in something like a W pattern, or it starts remounting key levels. So you'll see it remount like, a price range. Then the 9 EMA is coming in like this, it remounts that. Then the 50 will come in like that, then it remounts that. You're going to start trading these bottoming formations. And when we get to bottoming formations, again, we'll go over it more specifically. But know that you're going to be trading these bottoming formations, okay? And each time these break, you're going to trade them to the upside. Now, at some point, let's skip to the fourth one here. At some point, if the stock ever reaches, it was at 15 here, the IPO high was 40. That's where it IPO'd, even in the middle range here, if it had gone up to 60. Wherever that IPO high is, if it ever bottoms, trends, and then finally breaks that IPO high, that is usually sets up a big monster run.
This is only after the lockup expiration?
After lockup expiration. We're talking about, later on. This is usually a year or more out. Okay? So once it does break this high, wherever it is, if it was the day of the IPO or in the middle, wherever that high was made, once that breaks, that often sets the next big run in the stock. Okay, so we trade it as a bottoming formation through here and any little continuation patterns we see. But then finally, if it breaks that IPO high, we're going to jump in that. Let me show you a few examples here. We have Facebook here. You see Facebook, high was 45. Bottomed out. Now, you can't see the dailies on this because I have to go back. I have to go on the monthlies on this. But it had bottomed out here, and then it put in very strong bottoming formations. You can see all this positive volume that was coming in here, and it was remounting every major level. We had really good bottoming formations, and that took about 5 or 6 months. Okay, so it bottomed, started to trend, and May 2012, by August 2013, so a year and a half later, about a year and a half later, it broke its IPO high right here. And you can see it never looked back after that. That's when it made its big run, right? So always watch that IPO high. If it breaks that IPO high, you have a money setup right there. And a lot of the time you've been trading the bottoming formation as well. Let's go to more recently. So we were looking at Facebook there. Let's look at Twilio. Twilio basically is a textbook example of what happens here. I'm going to have to go to the 2-day to go back far enough. You see here, this is where Twilio IPO'd, okay? In quiet period, there was some back and forth. Quiet period ended right around here. You had this big run here and big run down, okay? So we had the big parabolic move here. We're going to go over parabolic shorts. I don't know if we have already yet, but this was a textbook parabolic short setup here. And then it basically bottomed and looked like it was doing nothing for about a year and a half, right? Looked like a dead stock. But you keep it on your list even if it looks like a dead stock, because a few years later, often a lot of these will wake up and they make huge runs. And it's basically kind of digesting this whole thing. People got scared of it. But eventually, these things will often make runs. We see the bottoming formation here in 2018, all this volume coming in. Then you see how it broke the 9. It broke this range here, continued to make these trend kind of runs. And then here, at about 70, right around 70, 71, it broke its IPO high. Since then, it's been on this huge run. It's basically doubled since it's broke its IPO high. And that wasn't that long ago. That was just before the big market meltdown last year. Now, it did. Normally, when they break their IPO highs and they're going to run, they never even test this level. They just keep going. This was a little different because the whole market melted down here, right? So this wasn't really stock specific. This is because of the market. But generally, it would not have even done this. It would have held this level and just keep running. You can see if we ignored what the market did here, it's ran from 70 to 126 cents. This is very common once they break their IPO high. And that's why we watch these for 2 or 3, 4 years, because we want to see if it breaks that IPO high. If it does, we're going to get a monster trade out of it, or a lot of trades out of it. This is a good example. Now I want to show you, have you been following the China IPOs like Huya, IQ, Billy?
Oh, yeah.
Okay. Okay, ignore this part of Twilio. Just look at what Twilio did. Let's actually pull up the chart here like this. Okay, look at what we see in Twilio. Early period kind of was pretty volatile. Then it made this huge parabolic run after quiet period. There was probably a lot of good news on it, right? Analyst reports came out, made this huge run. Lockup expiration comes and all the insiders start selling. That scares everybody, and boom, you get the huge move down. Very common. If you look at GoPro's chart was like this when it IPO'd. And then for about 2 years, it did pretty much nothing, right?
Right.
Now look at Huya. It is the exact same pattern as Twilio. Exactly. This is what I was talking about, like having this sixth sense and intuition. Mm-hmm. It's more pattern recognition. Like you see these same things happening over and over again. Twilio was in 2016. This is 2018 now. We had Huya. Huya did the exact same thing. Kind of during the early period, kind of ran, was volatile, had some decent trades out of it. Then made this humongous run during the middle period. Parabolic short, went way down, now has collapsed, has done a whole lot of nothing, and now is starting to wake up, and it might be bottoming here, right? Yeah. It is I mean, if I put Twilio here, you would think this is Twilio from 2016. It's the exact same thing.
Yeah.
And now we're getting kind of the same pattern. We're getting a bottoming formation here. Now, it seems really far away, right? We're at 26 and, you know, this thing's at 50. Mm-hmm. This could happen a month or two from now, or it could happen 6 months from now, wherever. You want to have this stock on your list, watch it. Eventually, if it keeps bottoming and keeps trending up, if Huya ever does break 50, you're not even going to think about it. You're going to jump in. Yeah. And I'm willing to bet if it ever does break 50 here, it may never do it, but if it does break 50, I'm willing to bet it would run to 100 very quickly.
I was thinking the same thing.
So, yeah, so keep an eye on here. Same thing with Billy. Same thing with, what's the other one? IQ. The same pattern over and over again. Now with Twilio back in 2016, ACI was another popular IPO back then, and it's been a little slower than Twilio, but it's following the same pattern. Had the big run, the big parabolic short, bottomed out for a long time, and now look, it's starting to wake up, and it looks like it might be starting to bottom here. Now, you know, you had a bottoming trade here potentially. Now, if it breaks this range, maybe you take it there. If this thing ever does break 120, the closing high was right around 120. If it ever does break 120, and again, it looks like it's far away, but these things can move very quickly. If it ever does break 120, you wouldn't even think about it. You would just jump right in. All right. Yep. So that's for the stocks that have been beaten down. Now for the stocks that have made big runs. So instead of being beaten down, you know, like down here, it IPO'd here, and now it's up here. For these ones, you're going to continue to look for continuation patterns as long as it continues to trend. So, and I don't know if we've gone over continuation patterns today, but anyway, you trade just the normal way of trading, you would trade it, okay? But you're also going to be on watch because at some point it will take a big dip, and you'll get like a parabolic short out of it or a topping pattern. Again, we'll talk about more about these setups later, but that's what you're going to be on the lookout for. High breaks, moving out, continuation patterns, remounts, and also parabolic shorts and runner shorts. Let me see if I have the chart here up for. So you can see even with Facebook, even though it's been, you know, ever since it's broke its IPO high, it has made a huge run. There were some really good short opportunities as well in here, you know, going from 70 to 60, going from 60 down to 45. So be on the lookout for those short opportunities, and we'll talk more about those short opportunities later. But just know that there'll be opportunity for those. Okay, so that's post-lockup expiration trading. Phase one, it's up to you if you want to trade during this period or not. It's more aggressive style. It's basically day trading or hybrid day trading swing. So basically all I'm doing during this period, even if I choose to trade it, is gapper strategies that we've talked about the gapper strategy, right?
Gap up,
for day trading.
Gap up, gap down.
Yeah. So if you see gap ups and gap downs in an IPO, you just basically overlay the gapper strategy and trade those the first hour. You can do that because they're very volatile. So even if it's not up 5%, if it's only gapping up or down 3%, they'll still be very volatile.
Yeah.
So you can do that. Also, look for intraday. First of all, you don't have daily candles, right? It's so early. You don't have much that's developed on the daily. So you're going to start, first few days, you're only going to be looking at the 5-minute. Then pretty soon you have ranges for 30-minute and 60-minute charts. And basically you're just going to be trading range breaks off those. If a range had developed here and then it pulls back and breaks that range, you can go long and trade it as a day trade or a quick hybrid swing trade. So you can do a lot of that aggressive type trading, or you could just not trade it at all and just wait for quiet period to end, depending on, how aggressive you want to be. So a couple of comments here though. Trade small because they are very volatile during this period. When I say trade small, for the intraday trading, just trade how you'd always intraday trade. But if you're going to hold overnight, because you never know what's going to happen with these things, trade it a little smaller in case it gaps up or down. So be wary of that. And use wide stops because there's a lot more manipulation during this period. And you're going to get taken out quite a bit. So you want to use very wide stops. Okay, now we're going to get to the middle period. Middle period is basically our normal trading. So quiet period has ended. Now analyst reports have come out. If the news is good, the stock is probably going to go higher. If there's a lot of bad reports, the stock is probably going to go lower, or if there's concerns. Yeah. So trade it like a normal momentum stock. You're trading trend pullbacks, continuations if it's going up. Look for runner shorts if it gets really extended, or parabolic shorts, as you've seen with Huya, Twilio, and I don't know if I pulled up GoPro, but these things will run very fast during this period, and then they'll make very quick dips during this period. And you can trade that parabolic short, which we haven't gone over yet, but we will. Okay, so now you know what to do during early period. You know what you can do during middle period and late period. Now let's talk specifically about a very short period, small period of time. That's this period in here. Okay, so we're going to add a fourth period. That's right around lockup expiration. All right. Now, already that a lot of shares are probably going to come on the market here, right? Because insiders haven't been able to trade and now they're going to want to.
Yeah.
So think about what's happening here. Let's say this was a stock that opened at 40. Now, there are two specific times when a lot of shares are going to be sold. Okay. One is when the stock has been beaten down. Like say, someone bought around, say the insider was in here at 30 or in here at 20, and they saw it open at 40 and all of a sudden it's gone down to 20 or 10 or 5, whatever it is. They think the stock is a dog. They just want to get out of it. They want their money back, right? Yeah. So in this period, you're going to get some selling. Surprisingly, not a whole lot, because a lot of people are just going to be value investors and say, okay, we're just going to hold. But there will be some. So expect it to go down when that happens, okay? So like when Facebook had opened at 40 and then come down, to 15 or wherever, when lockup expiration was, it likely took a quick dip.
Do you know a lot of like instances where an IPO on the day of lockup expiration, that morning it opens down like 10%?
That can happen, yeah, definitely.
Have you seen that before? I feel like I've seen like lockup expiration days, and it's usually uneventful for me. Maybe
sometimes they are, sometimes they're uneventful. That's why we can't just, when knowing this, you would think we could just come in and just put a blind short in and just mint money, but it doesn't work like that.
Okay.
But oftentimes they are going to take quick dips. If you look at, I think it was Snapchat had taken a quick dip after lockup expiration. But now the ones that really get a lot of selling are the ones that had made big runs. These even get more selling than the ones that are duds and get beaten down. Think about what's happening here. It opened at 40. There are initial investors who got in here at, 5, 10, 20, 30, whatever. All of a sudden they see their stock run up to say 90, and now it has pulled back to 70, and they're getting, even though they're sitting on a huge profit, you know, they see it coming down. They just want to lock in their profit, right? This is the one where you often get a lot of selling, which seems weird because it's doing so good, but this is often the one where we get a lot of selling. So I like to short these ones that have made these huge runs. All right. Now, let's talk about the ones that are really good candidates for shorting early. Now, a lot of times we just wait for lockup expiration. We see what happens like that day or a day after, and then we jump in once we have confirmation of what's happening. That's the safe way to play it. Okay. There's nothing wrong with that. That's a good way to do it. But one way we have an edge in predicting this is paying attention to the shares outstanding versus the float. Are you familiar with the difference between outstanding and float size?
Yeah.
Okay. So you know the shares outstanding are all of the shares, okay? But all of the shares are not publicly traded. And I honestly don't know how they make the decision on what's publicly going to be available and what's not. But just know that, like for instance, I was looking at Momo today. Momo broke out. I think it's up 12% today. It's not IPO anymore, but shares outstanding 206, float size is 58 million, right? Yeah. Now, let's pretend this was during IPO period. It's not an IPO anymore, but let's just pretend that. And we know we have this big difference, okay? If I see a stock that has 200 million shares outstanding and the float size is only 50 million, I know there are a lot of insiders in here. And I know a lot of new shares could potentially be available to trade. And there could be a lot of selling, right? And if I know this thing is run, I know a lot of people are going to want to get out and lock in their profits. Right. So if I see that, I might jump in before lockup expiration and put in my short. Okay? And then the other thing to be clear about is a lot of people think when they hear no insiders selling, that means you can't short. You can short throughout this whole period. Shorting's allowed. It's just insiders can't be selling.
Yeah.
So if I see this big discrepancy in here, and I know we've had a big run, I'll put in especially if it's already started to dip, I'll put in a short before lockup expiration. Okay. But now if the outstanding is 51 and the float size is 50, I know there's not likely to be a whole lot of action. And like you were saying, you know, a lot of times you see nothing happen, right?
Yeah.
Because there aren't a lot of shares that just new shares aren't coming on the market. So nothing is going to happen. So if I see that, I'm not going to go in early because the likelihood is it's not going to happen. Okay. But if I see a big discrepancy, I might put on that short early. So float size, shares available to trade. Outsiding is the float size plus insiders, and just subtract that to figure out how much could potentially. We ultimately don't know how much is really going to come in the market, but at least we know there's potential that it could. Okay, I think we've talked about all this. Keep IPOs on your list for 1 to 3 years. Actually, you could probably do it 4 years. Beaten down IPOs in the reversal phase. I really like to watch those. Like the Huyas right now, and you saw what Twilio did. Those are my favorite IPOs, is the ones that get beaten down and then start coming back. Right. Post lockup. During the middle phase, I love the ones that are running like crazy because I know I'm going to get a monster short out of them. And you saw that with Twilio and Huya. Yeah. Okay, and then you can go on the NASDAQ site. They have upcoming IPOs. IPO Scoop is a really good site as well. Okay, any questions about what we talked about?
Can you just analyze Snap? See where we are in the...
Okay, so you see here, Snapchat looks a lot like Facebook did. It's taking a little longer too, but yeah. We had the big crazy open. Everyone knew about Snapchat. This is the type of one where people who don't even trade start investing in it. You can see it went all the way up, open to 24, went all the way up to 30, and that was the high. Basically, nothing has happened since. I don't remember exactly. I'm guessing lockup expiration was somewhere around here. And at this point, there has been nothing to do with it. More recently, it's getting interesting. right?
Yeah.
We have some positive volume coming in. This is potentially that bottoming formation that might start to reverse. I would watch for it now that we have the 200-day moving average. You know, it's old enough now that a 200-day moving average has developed. I would watch for it to cross the 200-day. If it crosses the 200-day, maybe even take a position as seeing it as a bottom.
Yeah. Okay.
And then again, definitely watch this IPO range. It's a little tricky here. Do we consider the 30 or the closing? I would probably consider the 26.
Yeah.
To see if it ever gets back to that level.
Okay, so this is still in the bottoming phase.
Right, right.
Okay. What about
if it ever even does bottom? There's no guarantee these things will bottom, but if this does, you know, I would start playing it as a break of after the 200-day moving average. We could even do it here, but since the 200-day moving average is so close, I would wait for that.
Yeah. What about BABA? That was supposed to be like the next.
BABA's a little different. It's already made a lot of its big runs. So BABA was in 2014, right?
Yeah.
So, and you can see kind of the same thing. So again, we're on monthly, so we're not seeing it. Let me see if I go to the weekly, we can see it a little better. I can go back to 2014 on the weekly. Okay, so here was BABA. This played out not as this played out almost exactly like Twilio, right?
Yeah.
And what Huya is doing now. So we had the IPO and then the huge run here. Then we had the parabolic move down and it bottomed way down here, right?
Mm-hmm.
Now look what happened when it broke its IPO high. So you're seeing like,
never came back.
Notice when these things break their IPO highs, they just continue to run.
Yeah.
So we had this whole bottoming phase here a few years out. And then boom, once it broke that IPO high, it went on a crazy run. I wouldn't consider it IPO now. Now it's just a normal stock, all whatever's going on here. But you have a great example up to here of the first few years of the IPO, the whole process.
Yeah. 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 I just wanted to see it from.
Yeah. And you're going to see these things. I mean, if you go back and look at all of these stocks that you know now, Google, Netflix, even stocks like Chipotle, Lulu, Shake Shack, Habit, all these things. You see these 4 or 5 things, like they fit into categories. And certain ones did this and they play out exactly that way. And other ones do this certain thing and they play out. And you could practically, as long as you're getting a lot of IPOs, just trade IPOs. And you just see these same patterns play out over and over again.
Yeah, there are a lot more in the first few years of an IPO. They're a lot more similar to each other than just one stock.
Right. Similar, and once they start moving, you get a lot of volatility. They move in ways that more mature stocks aren't going to move.
Yeah. Okay.
Okay, good. So add this to your repertoire now. I think you're going to really like this. You're going to get probably 10 good opportunities with IPO trading every year, maybe even more.
What's supposed to be coming out this year? Lyft and
I had just gone through this a couple of weeks ago. I'm forgetting now, but Lyft, Uber, another big tech company that we all know.
Palantir,
Pinterest, yeah, Pinterest. And these are all ones. There's going to be this initial euphoria. People are going to trade it like crazy. There's going to be a lot of good early on. There will be a lot of good intraday day trading opportunities, but I would not swing them during that period. Then once quiet period ends, and this is going to be really good because you get to see the whole beginning period in real time and just kind of sit back and watch it. Then watch what happens during quiet period. Then you're going to see that middle period, how they run. And my guess is just like, Huya and these 10, it's kind of funny how it's like certain spaces all tend to IPO at the same time and you get these kind of opportunities together. Just like, Huya, Billy, and IQ are all Chinese multimedia companies. Mm-hmm. And they all basically did the same thing during the same period. And we're probably going to see that with Lyft and Uber as well. They're both going to IPO. They're both going to do very similar things and we'll get a lot of opportunity out of them.
Yeah. Okay.
All right. Any other questions?
Can you share that document with me?
Yeah. All right. Yeah, so you're going to really like this. You're going to have a huge edge because most people trading, especially retail traders, know none of this and don't treat it this way. So you're going to have a huge edge when you're doing this.
Yeah.
All right. Anything else? Anything you want to talk about?
No, I think that's it.
Okay, good. So next session, we'll make it an open session. Have your questions ready, whatever you want to talk about, and any trades you have. We'll go over that as well. Have you been working on day trading at all? We had gone over the gapper strategy.
No.
You haven't
It's too
worked
much.
on it?
It's too much for me right now.
Okay, yeah, no worries.
I like focusing on swing right now.
Okay, good.
Yeah.
All right, so I'm going to be out of town over the weekend. I'll be back on Tuesday, so I can do Wednesday or Thursday next week.
Why don't I want to take some more time to go over our old sessions and really write out my questions.
Okay, you want to do the week after?
Yeah, I'll be in touch for the following week. How's that?
Okay, yeah, let's not schedule it yet.
Okay.
But as it gets closer, just shoot me a message and we'll schedule something.
Okay, sounds good.
All right, Sibby.
All right, thanks, Paul. Appreciate it.
Talk to you soon.
Take care.
Bye.